All right, what's up, y'all? What is up? What is up? And welcome back to Wall Street Ben Black Playbook. How are y'all doing? Hope that y'all have had a good year in the market thus far. So I know my screen might be over here looking a little janky. You might be looking at this like, what's going on here, ma'am? Don't worry, I'm gonna show you. I'm gonna show you. Don't worry. So what I am looking at here is Micron. And what I have pulled up, let me turn off the fib. And what I have pulled up is I am looking at a very clear double bottom in here, right? And when this breaks this range in here of support found in here, like around 58.35, 58.40, yay, that's a good reentry back in, right? That's a really good reentry back in because we see that it's just sort of based and chopped around, sideways traded within there. So in this moving average I have pulled up is my 200, purely just because I kind of want to see like resistance, right? Which is coming in here around 60. So I'm definitely going to want to see like, what does this do when it hits this 200? Are we going to go through it, or is it going to reject it and come back down? I'm going to assume that we're going to go back through it, right? Oh my gosh, listen. And this is why you should just go ahead and buy the premium subscription on, yep, and there we go. It is annotating this as a double bottom as well. So this is why you want to use the premium subscription when you're coming in here and using TradingView. Okay, so you don't get those symbols pop up like, hey, you can only use 10 indicators. Yeah. But okay, so yeah, so this is saying here, now it do got this target coming all the way up here towards like 80, which, hey, we've seen the rally. We've seen the rally this year, right? Could it be? Quite possibly, but I'm definitely going to be looking to take it to, we see resistance once, twice, 3 times here, right? So we break over here. Truthfully, I would probably wait until I saw what was it going to do to this moving average. I'm going to want it above 60, and I'll be looking at swinging it up here to about 64.55 because Micron does not move that much in a single day. So what I want to go over with you all today is setting up your watch list. I want to go over with you all setting up your watch list and finding entry and exit levels. Okay. So market just closed. It is 3:31. I can go ahead and prepare my watch list for tomorrow. I can prepare my watch list for tomorrow. Now I'm probably going to have to make adjustments when pre-market, after pre-market tomorrow, and I'll see what's going on. I also believe that we do have some things popping up on the economic calendar tomorrow. So let's check that out, because listen, you should not start any day. Do not start any day without also having your fundamentals in order, right? You want to know like everything that's going on. So it was a pretty heavy day on the economic calendar today. We had retail sales, and these times are Eastern. So before the market even opened, we had retail sales and PPI, the producer price index, came out. And then we had Beige Book at 2, and then we had someone in the Fed speaking at 3:15, like right before the market was going to close. And then someone is coming in at 5 for Central. I'm Central time. So someone is going to come in, the Dallas Fed president. Now tomorrow, before the market opens, we have jobless claims and housing starts. Okay, so what the housing starts are, this is actually like a really good economic indicator, is housing starts. So what housing starts is so this is going to kind of go into like industrials, and when we're looking at the people who are building the homes, right? Like, are they starting construction on new builds? So that'll be interesting to see come in. They have the forecast at 1.36 million, which is going to be less than last month when it was 1.43 million. So they're thinking that construction on new homes went down. And then at right when the market opens at 9, because what we have the market, so this is Eastern time, 9 Eastern, 8 Central. Someone else in the Fed speaks, and then at 1:15, the vice chair, Brainerd, he speaks, right? So these are all things that we just want to pay attention to, okay? But let's us come back over here to our hand chart. So as I come in here and what I'm looking at, so I always start with the structure, okay? When I'm looking at anything, I go from the structure to the trend to candlesticks, then to the indicator, okay? Those 4 steps, I need 4 for 4 before I enter into any play. If 3 out of 4 things are telling me it's gonna be a bullish run, but then one thing is telling me bearish, more than likely I'm gonna leave that stock alone because there's 4,000 plus other options that I have out there to go and trade on, right? So those 4, the structure, which is supply and demand, the trend, okay, because the trend moves within structure, then candlesticks, and then indicators, and I need 4 for 4 to let me know what's up. So when I come in here, the first thing that I'm looking at as far my structure is still in play, right? We see this as a very clear demand zone. And one of the reasons that I know that this 48.88, 49 area is very much so a demand zone is because we see this double bottom here. At demand zones, we expect to see double bottoms formed, right? Because at demand, this is where we see buyers step in very heavy and they'll push the price up. So of course, I'm going to see the reversal move happen at support on a double bottom, right? Now, if it's a double top, I'm going to expect to see a double top at supply, at my supply zone, okay? Let's turn this one red as well. I'm going to expect to see a double top here. And of course I am, because this at supply zones where we find resistance is where sellers come in. So this is where we're going to see the rejects here, which is going to be the opposite of at our demand zones. We're going to see buyers step in and push the price up here, creating a double, or this could come back down. We could also break down here and create a triple bottom and then come back up, right? Lots of scenarios. We just have to be aware of all scenarios and then be ready to trade them. All right, so that is still in play. My supply zone, I'll mark off here just to roughly mark it off. So here, like around 65. And what I'm looking at now is to see if anything, if the stock is near my supply or demand zone, which it's not, right? So, okay. Now I'm going to move on and I'm going to check the trend. Let's turn off to 200. Now I'm going to move on and I'm going to check the trend of this, right? And I want to check the primary trend, secondary, as well as the minor, okay? As well as the minor. Now, my primary trend, we do see is making lower highs. It has rejected this resistance trend line once, twice, 3, 4 times, right? Now, if we break below this 56.20, which we see this is where it's accumulating in there, or where we'll see where it's consolidating in here, forming a base, right? So if we break below like this 56.20, then this base ended up being a distribution, and I'm going to expect it to come back down to at least here to 53, and then if it breaks that on back down here towards my support. Because like I said, we have continuously rejected this trend line since February 2022, when it was last here at my demand zone at 97, right? And I'm in my supply zone, and I know for sure that this is the supply zone because, oh gosh. It double topped, right? And then came back down. So I do enjoy using the indicator. So this is just the indicator that I'm doing to show the chart pattern, right? I do enjoy using that just for confirmation of, okay, is the computer seeing what I'm seeing too? You seeing what I'm seeing too? Okay, period. Now, what is it saying in here? Oh, this double topped in there. Met its target right in here and then came back up. Okay. But it's saying that this overall double top, if we do reject back down, right, that it sees its target coming back down here towards 32. Now, do I think that Micron is gonna break down there? I don't believe so. I don't believe so, right? But so we see this double top here. And truthfully, and this is why I say that chart patterns is subjective, I would even say, okay, well, this double topped right there, right? Although it's just calling this one a double top, but I would call this whole move a double top, and then we bounced back up and we're getting that move there. All right, so let's turn this off. It's going a little bit out of order. All right, so we see that we're making lower highs. Now I'm going to come in here and I'm going to check support, my support trend line, right? Now, if this is, so I cleared this off so that I'd be able to kind of like do a top-down analysis and walk us through this. However, if you already have everything charted, you really don't even have to worry about that, right? So like if we look at my daily watch list over here, I already have SPY charted, right? With my trend lines, and I'm already looking at that. That's not really even anything that I have to worry about. Ooh, this would be beautiful though. SPY below 390.65 tomorrow. Okay, let's go. So that's why I say, like, listen, take the time to come in here and chart this stuff all the way down. And you're just really making your job easier. You'd be making your job like a whole lot easier. Okay. All right, so now what I want to do is I want to catch the support trend line. So I'm not really easily seeing it here on the daily. And what I do see, this is makes me want, I want to draw my support trend line here, right? Which is in congruence with my demand zone here around this 48.88, 49. So when I'm looking at this chart pattern, or when I'm looking at my trend lines, that's right here, because we're still looking at the trends, right? What I see is that it's making lower highs. See, off our trend line, we're making lower highs, but then equal lows. Okay, it's making lower highs, but basically these equal lows in here, which is where this double bottom came from. And then this is a descending triangle. Okay, a descending triangle is going to have like these equal lows in here and then lower highs. This is going to hit. This is going to hit. If this breaks, if this rejects this trend line, this will hit and bring us right back down here towards this 48.88, 49 level. Okay, so I am definitely watching this for a break below, we'll say 55, just based off of those two things that I saw right there, right? We looked at the structure and then we looked at the trend, okay? And within the trend, I'm able to see said chart pattern. All right, so now what I wanna do is I wanna go over, and now I want to come in and I want to tune in. Well, let's look on the weekly. Let's look on the weekly. Let's just go up a little bit higher of a time frame, right? Just a little bit, just a little bit. Because although we do see this as a double bottom right here, very clear on the weekly. And if I pulled this back up, right, it's claiming it too. So we can see that if this breaks above here, right, this 58.35, we should easily get this move here to the 64.93, to the 65 level. We should easily get that move there. However, if it rejects this trend line, as it has previously done, right, and we get this under this 56, we could expect to bring it back down here and then this double bottom would not have played through, not at this moment. Maybe it could even triple bottom or be a multi-bottom pattern and go back up. But we see that we have definitely held this as our supply zone, and this is our demand zone. We see that it's been inside of this range since June, right? So either way that this runs, it shall run and it shall be pretty. So now what I want to look at is I'll be on the monthly, because now we want to look at the candlesticks. So here on the weekly, we've only had 2 trading days this week thus far. Today's Wednesday. The market was closed Monday for Martin Luther, in remembrance of Martin Luther King Jr.'s birthday. So now we so 2 days though, but this is 2 days of it rejecting this trend line, right? Because if I go to the daily, we see in here, but it has still kept inside of this base from this 5603 to this 5835, right? So I'm very, very aware of this base, this consolidation that it's forming in here, and I'm not going to want to break it until either way, because it's either going to break these highs in here, which is going to be outside of my trend line and give me this move here, or and then this base would have ended up being an accumulation phase, or is going to break down to the downside, and this base will have ended up being distribution. So when I am looking here, I don't really see a candlestick pattern or anything that has me going, ooh, right? I don't really quite see anything there. And with the volume, although we could call this an outside bar. We could, no, because it's not within the range of that. So yeah, I don't really quite see anything with candlesticks, not on the daily. So I always especially really want to start off on the daily before we go down. All right, so we've looked at structure, we've looked at the trend, we've looked at candlesticks. Now I want to pull up my indicators, okay? Now I want to pull up my indicators, because as of right now, my watch list is already stands as Micron MU over 5835. And my first profit target would be in here at this 60. And I'll show you why. Because we see like the clear, right? So previous support, then it acted as resistance when it broke down it, support, resistance, right? That would be my first profit target if we broke this. And again, Micron does not move that much in a day. So this 58.35 to this 60.45, and that would be a very nice profit in there. That'd be like a 3% move, a 3.3, 3.4% move. So that would be very much so worth our time. Okay, we just need this to go up $2. We like that. Or below 56, we'll just say 56 to make it a psychological whole number, right? And then I would take it to, this is the the next low under that, and I'd be looking to take it down here to 54. All right, now when I pull up when I move on to the indicator stage of this, what I'm looking at first is I want to look at divergences. So the divergences are going to come in on your MACD or your RSI. So how it works is if I see that my RSI is making higher lows, as it is in here, we're making higher lows. But then let's say the stock is making, which again in here, it is making lower lows, right? So that's actually a divergence. This is a divergence, which has me thinking, okay, this could break to the upside, and which would make sense, right? Because we see this double bottom here, which is a bullish movement. However, we also have our primary trend line here too. Right? So the beauty of having your trend and your structure marked off is that you'll be prepared either way. Do I see a bullish chart pattern? Yes. But do I see RSI? And I do see the momentum shifting up. However, the momentum is annotated by the yellow line, right? However, the price, which is annotated by the purple line when you're using RSI, looks as if it could also cross below it. It could cross below it, which would then in turn give us this move below the 56 that we'd want to and then we'd want to pay puts. So for example, let's look at a time when this has crossed, when we've seen the price cross below the moving average, so, or cross below momentum. So this is a great example right in here. See, we had the movement going up on the price, which is the purple line, right? Because it's moving averages. So look at the price, it's going up. And right in here, when it crossed below it, right there, right? We get this cross and then come down. And then we had this. It came back above momentum, look right there. And then the stock had a slight pullback right in here, right? We had a little bit of a pullback, but then look, it lost the momentum again, came back down and went back over, whoop, and so on. So it's all about seeing tomorrow, like, are you going to break below that, or are you just going to kiss it and ride it? Like here, it didn't break below right here, right? It just rode it. Broke below, we got this little pullback until it broke back above, and then that's the move that we see there, right? So 100% going to be watching this for RSI to see what move it's going to give us there. All right, now I'm going to move on and I'm going to do top down with my moving averages. Okay, and I'm going to start with the 200. So the 200 is known as like the value, as like fair value. And so you want to look at this in the sense of, if the price crosses below the 200, it's now trading below value. And we should expect to see a pretty big downtrend as we got in here, right? And when the price crosses above the 200, you should get a pretty large move to the upside. So we've been below this 200 basically this whole year, right? Did attempt to double top up there, but that's a bearish pattern, came back down. Or no, it double topped up there, which is a bearish pattern, came back down to previous demand zone and broke it, right? Now this demand zone is now acting as resistance. So look here. What are we saying? Above 58.35, right? This is where I'd want to take it here to my profit target is going to be like 60.48, which we see the moving average is coming in around 59.93. Now, moving averages are interactive, right? Like they're very interactive. They're going to adjust as the price adjusts because moving averages are showing us the average closing price of whatever time frame we have it set on. So if I'm at 200, it's showing me the average closing price of the past 200 days. So look at that. That's beautiful. That's beautiful in there, right? So you could even wait if you didn't want to play this channel and you just wanted the safest entry, right? You could wait for this to break 60.50 and then take this move here to the supply zone. And then take this move up to the supply zone because it would have crossed the 200. It would have crossed above the 200. And we love that. We love to see that. We love to see that. Okay. Moving averages act as support and resistance. They act as support and resistance. So now I'm going to pull up my 100 because I want to see if there were any crosses. We're seeing any crosses. So now you want to start comparing your lower and higher moving averages and start looking at crosses. So one thing I want to point out is look how the 100 double topped when this also double topped. Pretty cool, right? So in here, we see when the shorter term, which is the 100, crossed above the 200. This is when this push up happens in here, right? We got this, came down, rejected this 100, so on and so on, and then we get this cross below it right in here when we broke this, what was acting as a demand zone, broke that, came back down. All right, like I said, now we see that we're coming up in here. I don't see any crosses in between the 200 and the 100. However, this is a great indication for if we break up below this 56.03 to take it here to this 54.62 where the 100 is at. So that's giving me like parameters in here as well. Like I could scalp this to right here, or I could also wait for it to break the 54.62 to carry it back down, because we see that there is a gap here from 53 down to 50, right? So to enter back into that gap would be nice, because then it'd be very high probable that it's going to continue to come on down there to 59 or to 49, towards 49. So now I can turn off my 200. I saw what I had to saw what I had to see. So I have my 100 and my 50. Ew, and we love to see it, that 50 crossing over the 100. That 50 crossing over this 100, we love to see that. That is a bullish sentiment right here, that we're getting this cross above it. This is a very bullish sentiment. Keep the 50 and the 20. My shorter term, it's trying to come back up here. It's curving back up there. And then let's look at the 10, which was also, we got this bullish cross today of the 10 crossing the 50. Another bullish signal. Okay, so now I'm going to keep my 10 up and I'm going to go to the 1 hour. I love to use the 10 with my 1 hour. I love it. Let's turn off the 50. I'm going to turn on the 200 for resistance. That's all the way down there. And we got this cross today or last Friday. All right, and we're going to turn on the 10. Now, this lost a 10, right? Broke it, pulled back up to retest the 10, coming back down. We don't like that. We do not like that. And now let's adjust this to here. I like this more, like this 56.12. So I do like that this is rejecting it, but I'm still going to want it below the 56.12 before I get in, right? Because it could also come down here and then bounce back up. And so this is like what we'd be looking at here. Bounce up, maybe consolidate a little bit, break it, pull back, and then go. Right? So what we, that is a path that I would love to take, where they're really either direction, to the upside or to the downside. RSI is non-trending in here, which definitely makes sense, right? We've just been stuck in this range in here. RSI is non-trending. It's very flat. It's not looking like it wants to do anything. But if we look at this moving, or at the purple line, which is showing us the moving average, right? Came up, rejected it, came back down, which is literally what the price did right there, right? So it's just doing that. Now, in here, is now that I'm on my 1 hour, let's turn this 10 off. Now I'm going to pull up VWAP. And what I'm looking at is, again, it's pullback. It made a very slight pullback, right? From the initial drop, made a high, came back down, but it hasn't broken previous support. It just actually really just previous lows. It really just kind of stopped out right here, right? So yeah, but also this is an H pattern. So the momentum on the push back up was just not there. And if I change this to my Heiken Ashi, bullish movement, and that came back down. So I like using the Heiken Ashis because it clears up a lot of the noise. So it's just only going to show you, it only changes the color of the candlesticks until when the trend is broken, right? So like on the pullbacks, like we see in here, that's the only time that I like it, because it clears it up for you a little bit in there. But okay, so VWAP didn't quite lose that lower band in there. So okay, And then this is when I'm going to want to now pull up my Fibonacci extension. Extension because the initial move was an uptrend, right? We pulled back and now we just yoking around in here. Now we're yoking around in here. It has the zero line right in here, which we already marked here at 56.12 for when we'd want to get in below. If it broke zero on the fib, that level where we want to get in below, which we already saw that, whoop, whoop. And then above, honestly, I'm going to have to go ahead and say 57.11. Because I see this is the last previous high, right? And so this is coming in like around 56.87, 56.91. I'm fine with waiting for it to come to this 0.382 and then catching it up. I'm fine with missing this. However, you could, when you see it cross above this, the previous high, because then this low, because it's at a low right now, this is the previous high, rejected that, came down to here. So if it was to come back up here to the 0.382, this is now a swing low because it crossed previous high. It crossed the most recent high. So this would be a swing low, which again is confirmed when it comes here to this 57.11, which is this 0.382 ratio. Okay, y'all with me? Look, I'm saying y'all with me like y'all are actually here. Hope that y'all are, hope y'all are keeping up with me on that. Oh, my goodness. All right, now I also want to mark off my secondary trend. Which is honestly the same thing, right? It's really I'm just going to draw this, but we have, no, I'm not. And then the equal lows. Same thing, just wrote it here on this 4 hour. For the secondary trend, so then the 15-minute is just a range, but we'll also go ahead and so that we can see what the minor trend is. I mean, again, same thing, right? So this either needs to break here to the downside. And I'm really going to bring my rank. Then that'll be 1, 2, 3 touches of support and 1, 2, 3 touches on resistance, right? So I'm going to love this. So again, it's either going to come here and do that. More so like this is what we would want it to do. Come down here, bounce up, come back, pull back, and then go off. Or we're gonna and this is where we want to enter below here. Then we enter to catch that. Now we have our level set. Now, literally, all we have to do is wake up in the morning and see where it is pre-market and make adjustments from there. It is literally just that simple. Have your structure, look at the trend, look at candlesticks, and then look at your indicators. You'll be set. All right, I hope y'all enjoyed this class on how I go through, and I'm looking for my entry and exits and what would make a good play for the watch list. Bye, y'all.